Hi traders, you are welcome back to the Forex Geek channel. In this video, we are diving into the RSI and SMA strategy. It's one of the simplest yet most powerful setups for finding high probability trades. If you've ever struggled with trade entries or timing reversals, this strategy is going to change how you trade. So make sure you stick around till the end because I'll break it down step by step, okay, with examples. Now, before we jump into the setup, let us quickly go over why this strategy is so effective. The simple moving average helps us identify the overall market trend by smoothing out price action. It tells us whether we should be looking for buys or sells. Then the relative strength index is a momentum indicator that helps us identify when a currency pair is overbought or oversold. By combining these two tools, we can spot great trade setups while filtering out noise and false signals. All right. Now let us just break it down step by step so you can apply this strategy in your own trading. Okay. The first step is to identify the market trend. All right. Let us just change this to the 50 SMA. Let us use the 50 SMA. Okay. All right. So the 50 SMA will be used to determine the trend. If the price is above the 50 SMA, we are in an uptrend and we'll be looking for buy opportunities. But if the price is below the 50 SMA, we are in a downtrend and we'll be looking for sell opportunities. This ensures that we only take trades in the direction of the larger trend. The second step is to confirm entries with the RSI. Okay, the RSI helps us identify overbought and oversold conditions. If the RSI is below 30, the market is oversold and we look for buy opportunities. If the RSI is above 70, the market is overbought and we look for sell opportunities. However, just because the RSI hits these levels does not mean that we enter immediately. We need additional confirmation. Okay, so the third step is to wait for price to interact with the SMA. All right. In an uptrend, for example, we wait for the price to pull back towards the 50 SMA, like what we see happen here, before we look for a buy opportunity. In a downtrend, we wait for price to pull back towards the 50 SMA, like what we see here, before we look for sell opportunities. Okay. However, just because the price has pulled back to these levels, it doesn't mean that we should just jump in and buy or sell immediately. All right. You have to get confirmations. So once the price touches the 50 SMA, whether it's a buy or a sell opportunity, you look at the RSI. Okay. If the RSI was below 30 and crosses back above, it's a strong buy signal. So when you have that happen, alongside price getting rejected from the 50 SMA, it's a buy signal. You can enter your buy, set stop loss below the previous swing low. Take profit can be around key resistance zones. All right. On the other hand, if the RSI was above the 70 level and crosses back below, it's a strong sell signal, right? So in this case, this was where that happened. But here, it just got around between 50 and overbought. And then we got a rejection from here. So this was also a good sell opportunity where you can enter a sell, set stop loss above the recent swing high. Take profit can be around support zones. Okay. Always remember that risk management is key. All right. The crossovers, the crossovers from the overbought down, from the oversold up, and also from price, coming down from the moving average for a sell, climbing above the moving average for a buy, they are important. Crossover confirmations helps us avoid false breakouts and increases our trade accuracy. Okay, so When setting stop losses, you place your stop loss below the recent swing lows for buy trades and above the recent swing highs for sell trades. Then you take your profits at previous highs or lows or strong support and resistance levels. Okay? Now, here are some extra tips to improve your success rate with this strategy. First of all, stick to trending markets. Avoid using this strategy in choppy or sideways markets. For example, you can see that we had a sideways market around here. So during this situation, just stay out of the market, okay? No need to look for opportunities because it's a sideways market. You can see another example here. Sideways markets, no need to look for opportunities because it's a sideways market. Price was just going sideways. You can see the moving average was just going sideways as well. So no need to look for opportunities. Just stay out of the market when you notice such things, okay? Also, use the 1 hour and 4 hour time frames. You can start your analysis on there or on these time frames because they provide stronger signals than lower time frames. Then you can go back to your lower time frames and then look for precise entry points and exit points, okay? And then make sure that you always look for price action confirmation. Candlestick patterns like bullish engulfing, pin bars, or rejection wicks add extra confirmation. For example, if you want to enter a sell trade, you can look for bearish candlestick patterns around a resistance zone or around the dynamic moving average, right? Get your confirmation from candlestick pattern. If you want to enter a buy trade, you look for bullish candlestick patterns around the moving average, which is acting as a dynamic support. Once you get a confirmation, you can go ahead to enter your trade. All right. So that is how you trade with the RSI and SMA strategy. This method is simple, but highly effective when used correctly. If you found this video helpful, don't forget to like and subscribe for more trading content. And also let me know in the comments if you have any questions or if there is a strategy that you would like me to cover next. In the meantime, thank you for watching. But before we go, I just need to emphasize on risk management, okay? For those who like to trade using money that they cannot afford to lose, I'm just going to advise that you stop doing that. It is better to have peace of mind when trading, okay? So just stop using money that you cannot afford to lose to trade, okay? It's for your own good, all right? So thank you for watching, and I'll see you in the next video.